My name is Yanis Andreou, and today we are going to talk about some key economic indicators for the month of March in 2019. The benchmark qualifying rate is 5.34%. This is the rate that banks use to qualify an applicant in terms of the gross debt service and total debt service. The prime rate currently stands at 3.95%, and the prime rate is the rate that is used to set variable rates and also lines of credit. So usually, just to give you an idea, usually for a home equity line of credit, the rate is prime 3.95% plus 50 basis points, which is 4.45%. Also for variable rates, for a client that has impeccable credit, the best rate right now is prime 3.95 minus 1.05%, which comes down to 2.9%. The 5-year bond yield rate is currently 1.66%, and this is the rate that banks use to set their fixed 5-year rates. They would like to earn a yield of 1.5%, and as we will see further down, right now they're earning a yield of more than 1.5%. The overnight target rate is 1.75%, and this is the interbank lending rate between institutions. The 30-day bankers acceptance is at 2.25%. This is the base rate for variable rate spreads, and what it is it's a non-interest bearing note issued by a company and guaranteed by a bank for repayment. This forms the basis of variable rates, and the banks would like to earn 1.25% over the 90-day bank acceptance note. The average 5-year fixed mortgage was at 3.46%. The average 5-year variable mortgage was at 2.95%, but the best, as we know, is 2.90%. The variable rate against the bank accepted 90-day note spread is 0.72%, based on the variable rate against the 90-day acceptance rate. The 5-year fixed rate against the 5-year bond spread is 1.8%, which is above the 1.5% desirable spread banks would like to earn on their money. The chance to increase the overnight rate on April 24th, that is the next meeting of the Bank of Canada, is exactly at 0%. They're not going to do anything. The economy is not strong enough for them to increase the overnight rate, which will increase immediately variable rates and lines of credit. So the government doesn't really want to do, the Bank of Canada doesn't want to do that. If we assume a $600,000 mortgage at 2.9% variable and a 30-year amortization, the monthly payment becomes $2,491.80. The reason I mention that is the variable rate is very low now. It is much lower than the best fixed rate, which is approximately 3.46%, a little lower in some cases, and it is highly recommended because we don't anticipate the Bank of Canada to increase the overnight rate by more than 50 basis points, 0.5%, by the end of 2020, and it may actually cut it back if the economy doesn't progress according to its expectations. Hopefully you found this information very helpful, and if you did, feel free to share it with a friend. Thank you and have a wonderful day.